What's up guys, welcome to my channel again and again. Okay, Ken. So guys, in today's video I'm going to show you the full market structure. Okay, as we all know, market moves this way. Market moves in an uptrend. It moves in a forms a higher high and a higher low. Okay, in this scenario like this, market form higher high, higher low, higher high, higher low, higher high, and higher low, then higher high. This is a scenario in an uptrending move. So this is the way market move in an uptrend. Okay, so when market is moving in an uptrend, it's forming something like this: higher high and higher low. Okay, so as you can see, there's a higher low here, and higher high, higher low, higher high, higher low, higher high. So in this case, we are looking forward to buy this market while it's at its higher low, when it's in an uptrending move. Okay, so we are looking forward to buy this market while it's here. Okay, so in this case, we are buying at this point. We can't buy at this higher high. You can't buy the market at a higher high point, since we can easily be taken out with our stop loss. Our stop loss could easily be triggered before our take profit. So for example, if you take your buy position at this higher high, if you take your buy position at this higher high, you will put your stop loss just below this higher high. Okay, which is eventually wrong. Okay, so in this case here, you can see your stop loss will be hit. Let me show you. Your stop loss will be hit from here before hitting your take profit. Okay, so to avoid this, you should do this. Okay, you should bring your you should be targeting these higher lows. Okay, these higher lows are the one which you should be targeting. Okay, should be targeting these higher lows to take your buy position to the upside and catch this high, previous high or the next higher high. So in this case here, what you will do in this case, as you can see, you need confluences. You can see that we have this zone here, which you could consider this zone, this previous higher high you could consider, then you mark it. Okay, so you wait for this market to retrace back and form a higher low in order for you to take your buy position. So if you take your buy position at this point, so you can see, take your buy position here, you could target this previous higher high or the next higher high, and you catch your very good pips and moves in this market. Okay, so in a case of in a downtrending move like this, market moves and downtrend, forming lower low and lower high, lower low, lower high, lower low, lower high, lower low. Okay, so if market's moving like this, you tend to target the lower the lower lower highs. Okay, this is where you should be taking your sell position. Okay, you could not take your sell position at this point, because if you take your sell position here, your stop loss will be placed here. Okay, this is where you'll be placing your stop loss, which will be eventually be hit before hitting your take profit. So to avoid all these things, what you should do to avoid all these things you should be taking your trades at lower highs on a downtrending move. Okay, so here is where you should be taking your sell position. Okay, so you take your short tool and take your short position at this point and target the next lower low, the previous lower low, or the next lower low. So this is how you take your position, and this help you to minimize your stop loss and maximize your take profit. Okay, so in this way you could catch very good moves in the market. So market moves like this on, and in a case of consolidation phase, you wait for consolidation to end before you take your position. Okay, for example like this, like that. Okay, so this is a downtrending move in a consolidation phase. Okay, so in this case you wait for market to break this consolidation phase, then you take your sell position. You wait for this, you wait for this you wait for this retest. Okay, for this retest at this point, break and retest, then you take your sell position. So let's go to real market example, real chart, and I show you how these things works. Okay, how it works in a real chart example. So this is a euro USD, this is a euro USD. As you can see from here, from this point here, market was moving in an uptrend, market was moving in an uptrend, forming a higher high and a higher lows. Okay, forming higher highs and higher low. Let me show you. Market move like this, it formed this higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, then higher high. But this higher high, this higher high was like was was like this the previous higher high. So in this case the market tend to respect this trend line and push to the downside. Again here we had this important zone here. Okay, we had this important zone, okay, which was like a, a supply zone. Here we had this supply zone here. So market tend to break this supply zone, tend to break this supply zone in order to cut to reach this trend line. Okay, so this was like a fake out. Okay, so market tend to again continue to the downside move. So in this case here, you could look forward to take your position at these higher lows. Okay, these higher lows, these higher lows, higher lows. This is where you should be taking your buy position here, 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 and here. Okay, so this is where you could be taking your buy position. So in this case, you could not take your buy position at this point. You bring your buy position and took it from here. What will you be targeting now? So in this case you could take your stop loss here, which is eventually wrong. So your stop loss will be hit, as you can see, before hitting your take profit, and you could be stopped out immediately in this trade. Okay, so to avoid that, you wait for market to retrace into your point of interest before taking your buy position. So from here, as you can see, this was the zone that you could look for and take your buy position at this point and target the next higher high. You can see, target the next higher high, the previous higher high, or the next higher high, which was up there. Or you could target this supply zone here, this supply zone. Okay, so as you can see, these are very many pips. Okay, let me calculate for you the pips that are here. About 136 pips, 136 pips. So let me show you the bearish scenario. Okay, that was a bullish scenario. Let me show you the bearish scenario. So in this case, this it happens almost each and every time in the market. Okay, so in this case you can see, you just draw your trend line, you just draw your trend line. Okay, you just draw your trend line and observe what is happening. Okay, so in this case you should be taking your sell position at this point, at these lower highs. Okay, be taking, as you can see, market formed lower low, lower high, lower low, lower high, lower low, lower high, lower low, and it eventually break this trend line. Okay, so this is where you should be taking your trades. Okay, at these points, at these lower highs. Okay, at these lower highs, you just draw your trend line, and beside this trend line there is also this zone, that you should be. In this case, you could not come and buy and sell this market at this point, you come and sell this market at this point like this, you sell at this point, that's literally wrong, because your stop loss will be triggered before hitting your take profit. Your take profit will never be hit. So this if you trade this way, you will be losing your money daily. Okay, so there is also this demand zone here. As you can see, the market reacted to this demand zone and start selling. Okay, it break this past this demand zone, which came and form this resistance zone here and start selling. So this is how, guys, you can catch very many pips using this method on how to sell and how to buy in a forex market. Okay, so this is how you could buy and sell. Okay, just simple by just looking for market structure. Okay, just how you can buy and you can sell in a forex market. So it's very simple and it's everywhere in the market if you observe keenly. Okay, from here you can see the market move in an uptrend. Okay, in an uptrend, considering these are higher lows. Okay, so these was a fake out. Okay, you come and buy this market at this point. As you can see, this was an impulsive move to the upside. Okay, the market move impulsively to the upside, making very many pips. Okay, in this case you could catch very many pips here by buying at this point. Consider buying at this point. You target the next then the previous higher high or the next higher high that was formed. Okay, so this was like a synced, I think. Okay, so this is how you could catch very many pips in this market, forex market. Okay, as you can see, the examples are very many. Okay, this is how you buy and sell in a forex market. If even if you are a total beginner, can you fail to do this kind of thing? As you can see, let me show you. There's another good example here. At this point, you just use a trend line and support and resistance. Okay, there's this point here, is this point here. This was a very good swing. Okay, so market formed higher high, higher low, higher low at a very long time. Okay, so in this point we can see the market form lower high, lower low, 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 lower high, lower low. So the market just behaves in a good structure way. Okay, forming higher high and higher low. In this point you could sell your market at this point, up this point, you could sell at this point, up this point, you could sell from here up to here, you could sell at this point to this point, you could sell this market again at this point. Examples are very many, can tell you examples are very many. So you can see from here another position, so you could just see the market form higher high and higher low, higher low, higher high, higher low, higher high, higher low, higher high. This was a very good, in fact this was a very good swing position. At this point you could catch up this point. Okay, you could buy at this point, cut those cut those pips. Let me see how many pips are this, because this was a very good trade 361 pips. Okay, so that's how you could buy and sell in a forex market. Guys, I'm back I'm back now. I'll be uploading videos like daily, so I'm back. Okay, so examples are very many. As you can see how my charts are looking like, it's very clean. My charts are very clean. As you can see, uptrend, could look for buys opportunities only. So let's meet into another video, guys, as I show you the next thing that I'll be uploading. That's all about this video, and peace out.